Alright, for this video I want to go over the IRS Form 4797, the sale of business property. And specifically I want to talk about how to complete the 4797 if you're making a mark-to-market election under Section 475F for traders. Okay, so this is a sample 4797 for a taxpayer that qualifies for a trader tax status, or TTS for short, and then made the 475F election at the start of the year. So I've got the 4797 here that's part of a complete return for John, so it's his full 1040, and we'll go through all those pieces. And then in addition to this, I do have one slide here covering some background on trader tax status and the MTM election, and then the fact pattern itself, those details here. And then in addition to this, I do have one Excel workbook showing some of the details of the transactions that he had during the year. So if we start with the slide and then we'll go into the return next, some general background on trader tax status, right? So for purposes of this video, I'm going to assume that you're already relatively familiar with TTS. If you need some more information on that, I'll put some links to other videos below where I've done some more in-depth analysis on who qualifies for trader tax status. But generally speaking, TTS means that you are an active day trader, right? You're actively engaged in the business of trading stocks, and this allows you some benefits, right? It allows you to be able to claim ordinary and necessary business expenses, so to deduct those expenses under Section 162 of the tax code, rather than as an itemized deduction, right? So in order to qualify for TTS, you have to have substantial, regular, frequent, and continuous trading. There is no kind of set quantitative standard, right? So it's not a set in stone number of trading days per year, number of trades. We really just have to rely on case law in this space when the IRS has challenged a taxpayer's position. Now, if you qualify for trader tax status and you deduct these ordinary and necessary expenses, the income element, so the sale of your stocks as short-term capital gains and losses, these are still characterized as short-term capital gains or losses. They're reported on 8949 and Schedule D. And you still have to worry about things like the wash sale rules and the capital loss limitations, right? So if you have losses that exceed your capital gains, you are limited to deducting $3,000 of losses against your other ordinary income. And this is where the 475F election helps taxpayers out that have some substantial losses. So if you qualify for TTS and then you decide to make the 475F mark-to-market election, you now characterize your trades of those stocks as ordinary gains and losses. And then in addition to that, if you have any open positions at the end of the year, in the start of the year, you mark to market those positions as if they were sold. So how does this change things from a reporting perspective? Well, if you make this election at the start of the year, all of your trades for that year are going to be treated as ordinary gains and losses, and they're reported on the 4797 line 10 in part 2. Okay, so you're no longer reporting stuff on the 8949 or Schedule D. So if I have a quick look at the 4797 here, we're talking about this part. So part 2, ordinary gains and losses, this is where you would report those trading gains and losses from the sale of your stocks. Okay, they don't get reported on the 8949 anymore. All right, now, again, the appeal here is that if you have a large number of losses, you're not subject to those or that $3,000 capital loss limitation, right? And so if you have big losses, you can use those losses to offset all your other ordinary income. If you have NOLs, those NOLs can be carried forward, right? So there's a lot of benefits to having this 475F election. Now, if you do have any open positions held at the end of the prior year, if this is your first year making the election, when you file that Form 3115 for the accounting change to move from cash to mark-to-market, you might have a Section 481A adjustment. So the 481A adjustment is kind of like a true-up for a mark-to-market that you might have had at the end of the prior period. Now let's look at the fact pattern here for John, and then we'll jump into the return itself so we can see kind of how these pieces are working. So in our fact pattern here, we have John. He works as a financial advisor for a local bank. And this is during 2021. He was periodically trading some stocks, only did about 10 trades a month, but he had some success trading and decided, okay, I'm going to try it on a full-time basis. So at the end of the year, December 31, 2021, John sold all of his positions. He had nothing open in stocks or bonds. And then he started day trading full-time in January 2022. So he left his job, started day trading January 2022, and then he had some early losses to start. So he decided to make this MTM election to treat all those sales as ordinary gains and losses. So how did he go about doing that? Well, the 475 election, if he wants it to be effective for 2022, he has to file it before the deadline of his return from the prior year. So his 2021 tax return is going to be due April 15th, 2022. And so he made this mark-to-market election with his extension request, which is okay. You can do it that way. And he filed the extension on April 1st, 2022. So he made a valid and timely mark-to-market election. And so it should be valid for the 2022 tax year. Now, 2022 carries on. He's continuing to day trade throughout the year. Traded almost every day the markets were open. Total number of trades was 1,025 trades. Never held a position overnight. He was really day trading, moving in and out of positions throughout the day. And that's it. No long-term buy and holds. Now, John prepared a schedule that shows all of his trades during the year. That's that Excel workbook. We'll take a quick look at that. And he uses that to complete his 1040 and the 4797. All right. So if we have a look at the Excel workbook, I've hidden the rows in here just so it would fit on one page, but you should have something that looks like this, right? So what were you trading, the date you acquired the stock, the date you sold it. Notice that these are all the same days, right? So he's moving in and out of these sales, within minutes or maybe an hour or two throughout the day, not holding anything overnight. And so we have a column for gross sale price, cost basis, and then the gain or loss on the disposition. And so the IRS wants you to keep a similar format to what we have here in part 2. So we have a description of the property, date acquired or date sold, gross sale price. There's not going to be any depreciation for these stocks or this property for that matter. Cost basis, and then the gain or loss in total. So obviously we see here there's only 4 line items in part 2. So if you're a trader, you're obviously going to have way more than 4 property sales during the year. So that's why the instructions ask us to indicate trader, and then you can enter C attached, and then put the totals, and then attach a worksheet that shows each of the detailed transactions. So on John's workbook here, he wouldn't hide these rows. He would have all the rows, print out all the sheets. If it's 30 pages of transactions, that's fine. You have to attach it. So go ahead and do that. So John reports all of the gross amounts of the sale proceeds, the cost basis, his net loss overall for the year. And again, this is going to be ordinary loss, right? It's $179,000 in ordinary losses. It's not short-term capital losses, right? It's being recharacterized as ordinary pursuant to this mark-to-market election. So once he's got that completed, again, instead of being reported up on 8949 Schedule D, the amount of gains or losses is reported here in Part 1 on Schedule 1. So we have other gains or losses, 4797, and there's the total losses for the year. And so we can see on his tax return here, he does get a full deduction, right, for the ordinary losses of $179,028. And so this overall creates a net operating loss for John for the year, and so those net operating losses can be rolled forward. So he does prepare a carryover worksheet here. So he's done this to track, okay, in 2022, I did have a $179,028 NOL, and so I'm going to be carrying that forward to future tax years. All right, so the reporting is relatively straightforward, but obviously there's a lot of rules around whether or not you qualify for trader tax status. There's a lot of timing issues with how you make the 475F election. Also, got to be very careful with filing the Form 3115. That's the accounting change, right? Because again, you're moving from cash basis to this mark-to-market election. And then again, if you have any open positions, you might have needed a Section 481A adjustment that is either applied ratably over a course of years, or if it's under a certain amount, you can make an election to have that 481A adjustment included all in the first tax year that you make this filing. So I hope that was helpful. Again, I'll put some other links below for some other trader tax status videos. Go have a look at those. And as always, thank you so much for watching, and I look forward to seeing you again on the next video. Thank you.